What's up, Trader's Edge? It's Mark Sebastian, your only option. In today's edition of the Trader's Edge, I'm going to give you my VIX breakdown, my VIX temperature gauge. I'm going to tell you what happened with the S&P and where I think it's going next. And I'm going to drill this down into the one stock I'm watching that you need to pay attention to. So with that, let's dig in. All right, everybody. Hope you had a great trading week. I'm excited for trading to start on Tuesday. There is not a lot of economic news next week. It is normal expiration. That could be interesting. But, we are sitting right at all-time highs. The S&P closed within a sniff of an all-time high on Friday. Very, very close. First Friday in a while where we didn't get kind of a push lower. And with that, and this is where our VIX gauge, our VIX temperature gauge comes into play, VIX closed 1477. This is the lowest close of the year, everybody. The lowest close of the year. And the options on VIX also fell. So we now are at a spot where overall options are the cheapest they've been in 2025. What does that mean for us? That means that coming out of earnings, the ones that some of the stocks that we like higher or lower, their options are generally likely to be less expensive than they were the last cycle. So let's take a look at how this kind of plays out and what stock I am watching for next week. And the answer is Meta. Meta has been, it walks on water. Right now it is walking on water. It has been up almost non-stop since January 14th. Even on the days when we get big sell-offs, it's still up. It has run all the way up. It peaked out at over $740. This was a target Leisha showed me on her pitchforks, and she's saying, there is a level here. 740 might be a spot where it takes a breather. Now, looking at this red line, this is the cost of options on Meta. And I want to point out that while the VIX was dropping on Friday, we actually saw a little uptick in the cost of options in Meta, even as it was rallying, as it was hitting an all-time high. What does that mean? Typically, on an equity, if it's rallying and volatility starts to go up, that means it might be at a top. So looking at Meta, I don't know that I want to try and catch the falling knife, but I'm watching this implied volatility. If it continues to rally as Meta continues to rally, I'm going to set up a trade in Delta Strike where I will be looking to play to fade. It'll either be in Delta Strike or Trade Zone or both. Meta kind of sets up perfectly for a bearish zone trade, so it could be a really good trade zone trade. And if I get some bearish flow that aligns with us topping out, that would be what would get me into potentially buying puts in Meta. But I do think heading into expiration for February next Friday, coming off the long weekend with volatility starting to rally with Meta, we might be at a top, at least a near term with some pullback, maybe back toward 710, 700. Nothing crazy, but I think we're due for a pullback, and I think option markets are starting to say the same thing. All right, everybody. There you have it. If you didn't get a chance to see Hans and Hannah on Friday, you can catch the replay in this email. And to join Hans' special situation, simply click this link and you can join because it is a great opportunity to learn and add income trading to a part of your portfolio. As implied volatility continues to fall, income trading is going to be a bigger piece, and there is a huge opportunity in 2025 to add that to your portfolio. So I'd like you to
join him in this. I think you will learn a lot, and you're going to hopefully make some dollars, and be a better trader for it. So again, click this link. All right, everybody. If you're watching me on YouTube, please like and subscribe. Leave a question or a comment, and I will answer. I am Mark Sebastian. I am your only option. Have a great day.